Welcome to Invest in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And on today's show, we have a special interview with Bret Jensen. It has been a little while since Bret has been on the show, and so we talked and arranged an interview and had a great time as always, giving some updates on what's going on with Biotech, what to look forward to in the upcoming quarter. And he also gives, as always, a couple of specific picks with some upcoming catalysts. And we actually recorded this podcast a few days ago, and between the recording of the podcast and the publishing today, actually one of those picks has already jumped around 30%, but there should still be plenty of catalysts remaining, hopefully, for both of them. Either way, great update and great time with Bret. I also want to give you guys a quick update regarding the Warren Buffett study that I'm getting ready to launch. And funny thing happened. So I have actually been summoned for jury duty. And since I've been summoned for jury duty starting tomorrow, it may make it difficult for me to release this week that first in the series as I had hoped would happen. It could still happen, but at this point, that may not happen because I have no idea what will happen tomorrow with jury duty. So I apologize for any delays there, but cannot wait to get started on that. Stoked and excited, as I mentioned in a lot of detail on the last episode. So anyway, I hope you guys enjoyed today's show with Bret Jensen. Well, hey, Bret, welcome back to the show.
Hey, Brian. Great to be back.
Oh, always glad to have you with us, and it's fun to kind of pick your brain, especially when it comes to biotech investing. And as always, you've got a lot to offer, and so I'd love to. I guess we're here mid-late March, and so why don't you go ahead and kick us off and talk about what you see happening in terms of biotech going into the second quarter 2017.
Sure. It's definitely been an interesting year for biotech so far. The sector is actually outperforming the overall market after 18 months of being in a pretty significant bear market heading into year-end 2016. What's really helped so far is we had a huge uptick in M&A activity in January. Had 3 deals, one for $5 billion, one for $8 billion, one for $30 billion. That really kicked that part of the market off to a good start after a very punk year in 2016. It's one of the reasons in February, biotech was up about 10%. So far in March, we're seeing some consolidation of those gains. We haven't really seen any follow-up on some of the M&A activity in January, and we're hitting really hard against some resistance levels that have been in place since the last part of 2015. Given that we're pretty much largely done with fourth quarter earnings, in order to get past those resistance levels, we're going to either need to see an uptick at M&A, or we're going to have to wait for the next quarterly earnings go around.
Excellent. So are you optimistic for that? Are you expecting next quarter earnings to be positive or flat?
I think that we'll still continue to see good earnings and revenue growth from both the pharma and the biotech names, especially large caps. I also think that we will see a continued uptick in M&A, even though it might be a little lumpy. Companies have a lot of cash flow. They need to replenish their pipelines. Obviously, the new administration, from a regulatory point of view, is probably a little more benign than the previous administration as well.
Speaking of administrations, how do you see biotech shaping under President Trump?
It's interesting. Every now and again, he'll tweet out something. He'll tweet out a
yes,
lot
he
of
does.
things. But every now and again, he'll actually do something around the sector itself. And you get a 1% decline, although I think we're kind of getting we'll ignore it. I think with the new president, you really do need to watch his actions and not his tweets or words or sound bites. He's appointed 2 very free market oriented people to head agencies, Tom Price in Health and Human Services, and then Scott Gottlieb, which is nominated as the FDA head, who's advocated for a faster approval process with the FDA, which obviously would be hugely beneficial given the cost of drug discovery and trial development and all that. They've also proposed to double the fees that the FDA charges to go ahead and review drugs for approval, which actually is a good thing. It amounts to about $1 billion a year. And if a company can go ahead and get a faster response compared to the months that it could be on the market, they'll gladly pay that. So I would say that's a positive. One of the things I'm watching very closely is how the repeal and replace of the ACA goes. because although that won't affect pharma or biotech that much, it will affect insurance carriers and hospitals, obviously. But that is the first domino that needs to fall before we can go ahead and get to tax and regulatory reform. And that's one of the major reasons the market's done so well since the election, especially the biotech sector. So I am watching that something gets done on that front so we can move on to that next effort to go ahead and reform the tax system, which should liberate, tens of billions of dollars of funds trapped overseas in some of the operations in the pharma and the drug giants, and a more level playing field as far as the tax structure compared to other G7 nations will also help not only the sector but the market as well.
Of course, if we have to wait until after something happens with the ACA, this could be a long wait for that.
Well, I think we can't get into a critical point here. We got a vote here this Thursday in the House. It's gone through 3 panels. It looks like the president has done a pretty decent job on strong-arming some people that were previous no's into yeses. So I think that'll be the next step forward. But I think if we are going to get the ACA repealed in place, it will happen by April or May. If it doesn't happen by then, it probably won't. And you're probably going to see a hiccup in the market, not only for the biotech sector, but the market overall, given the extent of the post-election rally. Because once you have the ACA done, you have tax and regulatory reform. But after that, you have the infrastructure spending. So if one domino falls, the next one is pretty much very likely not to succeed either. So if you do get the ACA not passing or the repeal not passing, you're going to see a sell-off on the market, especially the stocks and sectors like infrastructure that round up so far since the election on the hopes of additional infrastructure spending.
So the timeline you see for that is first ACA, then the tax and regulatory reform, then infrastructure.
It has to be that way because one of the reasons the huge amount of money we spent in the 2009 stimulus package wasn't as effective as it could have been is the $100 billion to the infrastructure was largely delayed because of local, state, and federal environmental reviews along with other regulatory morasses.
Okay.
So in order to make that money actually effective in the economy, I think the administration is right lining it up this way, but it makes it's a political gamble.
Sure. Yeah. I'd say there's a lot of those going on. So regarding the ACA, obviously that's the one that most near term would impact biotech because of how that will affect tax and regulatory reform, which will affect biotech directly as well. So this may be a little bit off topic. So you think that the ACA stuff, it could be repealed that quickly in April or May? That seems, I guess, because getting it established. Getting it repealed is a lot easier than getting it established, maybe, as long as you have the votes, because obviously it seemed like it took years and years and years to get it going. Part of me kind of assumed it may be a really long battle to unwind it if they want to.
Yeah, remember, Brian, a lot of the stuff in the ACA is staying. I mean, the pre-existing conditions, saying on your parents' coverage until 26. They're going to revisit how they do Medicaid. They're going to use more tax credits and more free market bent to things like that. But a lot of some of the ACA is staying. So it's not like you're yanking out the entire thing.
Right.
You're kind of yanking out the things that aren't working, such as the insurance exchanges and stuff like that.
Right.
And you also need the CBO scoring. If you go ahead and get a bill in there that results in less of a deficit over the next 10 years, you can then go ahead and leverage that savings according to CBO, in order to go ahead and leverage tax reform.
Right.
So they kind of fall all together.
Yeah. No, it makes sense. It's just, I want to say funny, but it's really not funny. But just depending on who you listen to, on which side of the aisle, it's Armageddon one way or the other. Armageddon to keep it, Armageddon to take it away, and it makes it sound. It can be difficult to obviously sift through sometimes. So I appreciate your perspective on those things. In light of that, I know I was talking about biotech, and there's a lot of large cap biotechs you like to highlight as well. But I think people especially enjoy hearing what you like in the small cap space. That seems to obviously typically more risk there, but also a lot of excitement and potential. So what are you looking at small cap wise in the biotech space?
Yeah, today I'm going to offer up a couple of small caps, selling both for just about $10. One's a little under, one's a little over, and they're both focused on the ocular space. One is called Ocular Therapeutix. It's about a $275 million market cap.
What's the ticker?
It's OCUL.
OCUL.
Their big trigger event is going to happen in July. They have a product called Dextenza, which it will be used if approved for cataract surgeries, which is about 3 million of them a year. The price point will be about $400. Obviously, any kind of decent market penetration is going to be a very big thing for such a small company. You also have had some insider buying on this name. It goes for about $9.50 a share. You've had some recent analyst price targets all the way into the mid-30s. You've also had some, like I said, insider buying in the name as well. So I like the risk reward on that one. And then there's another ocular concern, which is I call hybrid, because their current drug on the market is called Omerisk, also used in surgeries with concerning the eye. Is running about $50 million a year currently, having a nice little sales ramp up. It's about a $500 million market cap company.
And what was the name again? I think I missed it.
I'm sorry, Omerisk. OMER.
OMER.
Yeah. And
the ticker is OMER, but the name was Omerisk
Corporation, yes.
Okay, gotcha.
And so they have the one drug on the market that's doing well. It's only been on the market for a year or two. But what's really exciting about this company is the potential of a compound called OMS721. Now, this is compounds in mid-stage testing for 5 rare disease indication. Actually, one is now moving to phase 3 for something called atypical hemolytic uremic syndrome. It's commonly referred to. Can you say
that 3 more times, please?
Yes. Commonly referred to by its initials AHUS. Now, this is currently the only thing really out there to treat this rare disease is a product from Alexion Pharmaceuticals called Solaris. Now, Solaris is one of the highest priced drugs out there, several $100,000 a year, and is basically should do a little over $3 billion in revenues this year. So obviously, just for that one potential indication, you can see the possible blockbuster potential of this one compound. So it's kind of a neat little play where they have one drug on the market that's shown a sales increase, and then they got a real potential blockbuster in the pipeline. This is another one that sells just over 10, but you've seen several analysts put price targets in the 30s on this as well. So another high risk, high reward, but I think has a very attractive risk profile at this current point in time.
So both of those are right around the $10 range, but some people are putting price targets up in the $30 range. So each one of those, if those trigger events go well, it could be triple in price, but obviously, those trigger events are not guaranteed. So,
yeah, I think the Dextenza approval in July is obviously the near term catalyst for ocular.
Right.
But if OMS721 pans out for Omerisk, that really could, we're talking a couple of years down the line, could really buoy the stock.
Okay. So Omerisk is more of a, not longer term, but it's more measured in years, whereas ocular is more measured in months right now.
As far as the next trigger event, yes.
Okay. Great. Fantastic. Well, thanks, Bret. I appreciate that.
Yeah, Brian, it's always great to be on your show.
Absolutely. We appreciate your time and insights into biotech in general, but obviously those special small cap picks are appreciated. We'll look forward to seeing how they pan out.
Great.
All right. Have a great day.
Thanks, Brian.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.